people are not globally diversified. Most portfolios are heavily concentrated in Indian stocks and bonds and mutual funds. So there'll be periods of underperformance like there was in 2019 and 20 when you want to have some of your money in global stocks. Indian mutual funds which invest in global stocks, they have hit their limit.
The three of the prominent players today that allow you to invest in the US stocks via LRS route is INDmoney and Vested Finance and Appreciate. You'll be done in within 5 to 6 minutes, is what I have also personally experienced when I install the app. The settlements will be in 24 hours.
When you invest in the US, you enjoy the benefits of the rupee depreciating against the dollar.
And also there are other benefits like fractional investing. But I just bought Tesla at just as low as 100 rupees.
Hello and welcome to Moneynomics. Today's episode is on a subject that's very close to my heart, which is international diversification. And I say it often because one of the big areas of finance which is a problem in this country is that people are not globally diversified. Most portfolios are heavily concentrated in Indian stocks and bonds and mutual funds. To discuss more about it is my colleague Anil Poste.
Yeah.
Anil's article will be out on the same subject very soon. First, let's just take you all through the process of international investing. The case for it, I think, is self-evident that you don't want all your eggs to be in one basket, which is India. It's a great country with great prospects, but you never know, there'll be periods of underperformance like there was in 2019 and 20 when you want to have some of your money in global stocks. Right. And the problem is that Indian mutual funds which invest in global stocks, they have hit their limit ever since 2022, and so they open and close very briefly for some periods of time, but mostly it's very difficult to invest through them in overseas stocks anymore. So really the only option left is LRS. Through LRS you open a foreign brokerage account and you invest in international stocks. So Anil, if you can first take us through the KYC that's required to open one of these accounts, and who are the players involved?
Right. So the three of the prominent players today that allow you to invest in the US stocks via LRS route is INDmoney and Vested Finance and Appreciate. These three are three of the prominent platforms. And to get started, you need to install the app, of course, first, and then using your Aadhaar and PAN, you can register yourself. And the process is entirely online. There'll be a video KYC, and you need to upload your Aadhaar and PAN. And yes, you'll be done in within 5 to 6 minutes, is what I have also personally experienced when I installed the app. And that is how you can get started. And later on, of course, you have to link your bank with the partnered bank, specific banks. So which will be there, of course, mentioned in the story.
Yes. So we'll just get to the bank part for later. But just to give you guys some info on the three players. So INDmoney is also a broker registered in India.
Oh yes,
Although you don't deal with that part of the business when you are doing your international stocks. Vested Finance is not registered in India, but it is registered with the US SEC. And Appreciate is a fintech. And all three of them have the same broker-dealer partner in the United States, which is Drive Wealth. Now, coming to the bank part of it, so Anil, you just want to clarify on which partner banks are there with these?
So Vested is partnered with ICICI, HDFC and Axis Bank. Although they accept money from all the banks, but they say if you have account with these three banks, the settlements are quite fast. Like the settlements will be in 24 hours. Settlement means the money that you transfer between the US stock wallet and the bank. We'll come to that, how the US stock wallet works. And same is the case with INDmoney. And of course, with Appreciate, they have only as of now partnered with Yes Bank. Yes, that is namely the banks.
So the reason why these partnerships are important is because of the forex charges and spreads. So when you remit money abroad and you bring it back, every time you pay a pretty hefty forex spread, and there could also be some bank charges. And essentially what these fintechs do is they strike deals with those respective banks where their customers are not charged so much while transferring money abroad and back. So Anil, what did the fintechs tell you in terms of charges that their customers pay?
So typically these platforms, all three of them said to me that on an average they charge between 1 to 2%. The banks charges the users 1 to 2% while they transfer the funds between the US stock and the bank.
1 to 2%. So it's not nothing, it's not negligible, but it is not as much as, for example, what you'd be charged in an airport forex counter, where it could go up to 10% if you're traveling abroad. And if you are investing for the long term, then a 2% charge can get ironed out. If you're investing for a 5-year period, which is what you should be in equities,
Right.
whether it's US or Indian, doesn't matter, then a 2% charge should not really affect your returns in a massive way. Apart from this, of course, when you invest in the US, you enjoy the benefits of the rupee depreciating against the dollar, because your
Right, yeah.
investments are in dollars.
Right.
And that can cancel out the forex.
Of course, yeah. And also there are other benefits like fractional investing. For example, today the Tesla stock is trading for about $350, but I just bought Tesla at just as low as 100 rupees. So yeah, that is that you can buy a portion of,
You can buy
Right.
a fraction of a stock, less than one stock, which you can't do in India.
which you can't do in India. Of course, and you get access to the global diversification. Like you can invest in the global ETFs, all the global ETFs which are listed on the US stock
Yes,
exchange.
yes. So to me, that is the most compelling argument of global diversification, that people think of these accounts as a way to get into US tech stocks, because that has been the raciest part of the global universe of stocks in the past several years. But really, the US also opens up world markets to you through ETFs. There are ETFs tracking countries around the world, including Brazil, Mexico, China. ETFs that you will not get in India. So if you are bullish on those geographies, and they have, some of them have gotten really cheap over the years, because the US market has boomed, but the other emerging markets have not done well. India has been a bit of an outlier. India has also done well, but you can leverage these accounts in the US to get access to world
Emerging markets, yeah.
emerging markets, stock markets. Now, one really important thing to keep in mind is, of course, the tax filing, the tax position. So, Anil, you want to explain what the capital gains taxes are in India?
Right. So, so of course, the holding period for the US stocks is 2 years. After 2 years, the tax is 12.5%, and the short-term tax, which is less than 2 years, is based on your slab rate. So that is how the tax works.
So, according to the US India Double Taxation Avoidance Agreement, capital gains is taxable in India at the rates that Anil just mentioned. In case of dividends, there is a 25% withholding tax by the US. And you can claim that in your Indian income tax returns. While you're filing returns here, you can claim the benefit of that withholding tax here. Because in India, dividends are fully taxable at slab rate. So if, for example, you're in the 30% slab, but the US has deducted 25%, you just have to pay 5% in India. The other thing to note while about taxation is that when you remit money to these overseas brokerages, more than 7 lakhs in a year, there is a 20% TCS or tax collected at source. And the TCS you can adjust against your tax liability. So if you have, let's say, salary income or business income, and you have, let's say 5 lakhs of tax liability in a year, and you remit some money, let's say that you remit 20 lakhs, right? So you have a 4 lakh TCS imposed on it at 20%. So that 4 lakhs can adjust against your 5 lakh tax liability. So you have to only pay 1 lakh more for your income. And if you don't have that much income tax due, you can claim a refund. Of course, it does create a cash flow issue, because you're paying the tax upfront. The TCS is being deducted upfront, but you get your refund at the end of the year. But it's a temporary phenomena to deal with. Another thing to keep in mind with tax is reporting the foreign assets and income in Schedule FA, Schedule Foreign Assets, of your income tax return. This is really important, because if you miss this, if you mistakenly also mess it up, then you can be liable for penalty and prosecution under the Black Money Act. So you have to be really careful about including every detail in Schedule FA. But that should not deter you. In fact, the government has been loosening up on this very almost draconian regime. So in the recent budget, finance minister introduced a provision where up to 20 lakhs, if you have inadvertently missed out some of this stuff, then there is no penalty leviable on you. Of course, you should not bring it to that position, but it was not as bad as it used to be in past years. I think anything that we missed covering.
Just the LRS limit is, of course, $2.5 lakh.
Yes. It's your total amount that you can invest abroad in any financial year is $2.5 lakh, which is huge amount in
which is huge amount. It roughly translates to 2 crores, 2 crore rupees. It's significant. Yeah.
Which is a significant amount, but that is the cap per person per year. If you have any questions about international investing, please do reach out to us in the comments or on social media. But thank you so much for watching. This is a space that I think will really blow up in the next few years, and we are going to be keenly following it.
Yes. Thank you.
Thank you.